Hello, what's up, guys? Welcome back to another episode of Credit Suisse. Today, we're going to talk about, of course, the scandal of Credit Suisse and how this whole mess was happening. So, it's going to be quite a video because we'll be talking a lot of scandals, we'll be talking a lot of crime, and we have to understand what was truly going on with this 167-year-old bank has gone through. Because this bank, Credit Suisse, is one of the biggest, I would say, investment bank and also a global bank around the world. So its main business is provide private banking business, also wealth management and investment banking and etc. So it is a very big bank and it has uh, thousands of billions of assets exposure. And if Credit Suisse would bankrupt, that would actually mean that would become the fragility of the European banking system, and it will create systemic risk um, to the entire European banking system. So you could say that right now, Credit Suisse is having a big trouble, but from different perspectives. Some of analysts said that um, compared to Lehman Brothers, Credit Suisse still has good, I would say, capital tier one ratio. It has good uh, capital reserve ratio. So it was like somewhere around 13%, which compared to the 8% of regulatory requirement is still a good bank. But um, apparently, Credit Suisse has gone through many restructures. Right now, Credit Suisse is also having a new restructure under the new CEO, the Corner, Mr. Ulrich Corner. He is now the new CEO in charging of the entire restructuring uh, business of Credit Suisse. Then now we will see how it goes. But let's start from talking about how Credit Suisse end up like this. I think there might be three reasons why Credit Suisse is having all of these mess. First reason is Credit Suisse has an extremely bad company culture. As you can see, um, there are many scandals. There are many scandals and many um, crises that were linked with Credit Suisse. And we were talking about some, really crazy stuff. We were talking about uh, laundering money for drug dealers, and we were also talking about lending excessive leverage to a hedge fund called Archegos. And then uh, when Archegos goes down, the Credit Suisse also suffering around 5.5 billion losses, and that was big because Archegos was basically operating like a heavy gambler, and they are also partnering, manipulating the share prices and all. The Credit Suisse is also involved in the green seal business. It was supposed to be a supply chain finance. So the deal was like Credit Suisse would provide up to $10 billion a loan to SoftBank. So SoftBank and to not SoftBank, but the Green Seal Company. So Green Seal Company could lend this money directly pay their supply chain customers because people who worked in the supply chain business know what I'm talking about because if you're working for this industry, sometimes it will be very annoying to wait for the payments. It would take quite some time for you to get the payments. So the idea is to pay, and also in the same time you're bearing the risk because what if your customer got bankrupted and you cannot take back any money? So that would be a risk. So Green Seal, the entire Green Seal idea was based on that. So basically the idea is I will be able to pay you immediately as long as you have this order. But the thing is, you have to sacrifice a little bit of yield, and I will be a financier. I will finance you and pay you upfront, and I'll get this money from your customer later. So that was the entire idea. But then Greensill was supposed to use the $10 billion loan from the Credit Suisse. These money are supposedly helped the SME, the middle and small companies, and to be able to smooth the supply chain business. But on the other hand, um, Greensill has a strong connections with the SoftBank, which is the Mr. Sun. Mr. Sun was the Korean Japanese people, and he was basically the one of the biggest fund manager in Asia, and he decided that he will take this money and misuse all this money and inject those money to other companies which directly link to SoftBank. And then what happened is it turns out these 10 billions worth of loan didn't go to the areas as they have promised. These loans actually went to different fields and it was heavily misused. So there is a significant moral hazard between this entire green seal thing. So Credit Suisse still working to reclaim this money, trying to reclaim the loans and retrieve them. And also the Archegos thing, not just stock manipulation, not just lending money to a extremely risky business. We're talking about family office, and that was their deal and transactions are completely out of the radar, meaning most of the transactions go through different swap. So a lot of exposures are actually off balance sheet. So there is very little chance that you may learn. It's like a black box. So you don't actually you will basically learn nothing if this entire thing hasn't been blown up. It's because Mr. Bill Huang is very clever. He knows how to hide his positions when he's buying a lot of shares. He understands his certain positions should be hide under several investment banks' names. So Credit Suisse became the top priority for these equally shady men. And then Bill Huang blow up. Bill Huang failed, and then entire Credit Suisse got hit. And then that's creating a huge loss. And on top of that, start from 2008, Credit Suisse was the least impacted bank uh, because back then during 2008, Credit Suisse as a Swiss national bank, as a Swiss bank, it did not have a lot of derivative related positions, especially not related to the subprime mortgages, the SBMS. So fortunately, Credit Suisse was having a good start, but unfortunately that the Credit Suisse has extremely bad company culture that they have to steal someone's money, they have to collude with shady people, they have to work with Russian oligarch, they have to work with cartel drug lords, and they even they are in everywhere, right? In Africa, they're trying to have these tuna thing. They call this tuna scandal. So basically, they're doing these very risky money laundry for the cartel. And then they are trying to do a lot of stupid things, and the entire thing has gone to crazy. So he has a very very bad company culture, and he has a really bad only profit seeking culture, and then they would take whatever it takes to get there. So I think the first reason why Credit Suisse has gone so bad is because they have extremely aggressive company culture. They have focusing a lot of and only on the profit, and they have uh, no precaution. They have no moral standards. So I think that's why they have got so much of failures, and then they got so much fine. And then I think the second reasons why Credit Suisse stock has been performing extremely badly, I think, is about the extremely corrupted management. And something happened between the board, the senior management, and also with the employees. So this is how it goes. In 10 years, Credit Suisse has changed three different CEO. Okay, so you have three different CEO. I have I have wrote about that in my article. So you have start from 2015 to 2020. You have the JMTM, the guy, and then he was involved with a espionage scandal because he was charged. Um, he's been charged with the crime that he's sending some people stalking the senior management team, and then the entire thing went viral. Um, Shareholders very disappointed. How? Why would a CEO do that? And because there is a strange and continuous political, like, fighting for the power inside of Credit Suisse. So people out there just send spy, and you can just spy your employee just like that. You can break the rules because the CEO, the managements, the even the board members are not following the rules. So you have, this mismanagement, and you have corrupted company CEO. And then you have Thomas Godstan, which start from 2022 and start from February, and he stepped down from the CEO position to the July, and then he kind of stepped down, right? So he became the Credit Suisse CEO for only 5 months, and he's been blamed of overusing the company jets, the corporate airplane, and then he's breaking the rules. He's not following the rules of the quarantine. So he goes to and watch the football game. He watched the tennis game on the same day. So the guy has the CEO. He looks decent, but then he likes to break rules. Maybe that's the stereotypical Credit Suisse guy. I don't know. Let me know if you are actually working for Credit Suisse. I actually want to know what happened inside of that company. And you can just, if you are one of them, I'm not saying you're corrupted, but if you know something, you can leave a message below the comment section, and we can arrange an interview. I think that would be extremely interesting, and we'll see how it goes. And also, after July of 2022, you have another CEO called Ulrich Gorner, and then he was being summoned back to try to restructure the entire company. But then that would become another problem because Credit Suisse right now, no one wants to work for Credit Suisse because you don't want your resume and your business card printed with Credit Suisse at this moment, because people, you have these kind of distrust from um, other companies from the financial industry. So you probably want to go to the other firm. You want to go to work for other hedge funds. Maybe you want to work for another financial institutions instead of Credit Suisse. So that would be the problem. And now they are trying to, uh, you know, maintain the bonus. They're trying to maintain the payment structure in order just to keep these talented individuals stay in a Credit Suisse. But the problem is, if you're not changing the culture, these people are still the same. Even though you somehow restructure and then you cut down these employees, the reason why you think they're valuable is because maybe they are just good at breaking rules. Maybe they are just very, very good at helping money laundry for oligarch. Maybe they have these, strange talents. But from my opinion, I think Credit Suisse, if you really want to restructure them, you need to fire them all, right? And or you still have you're going to the same path because you've been doing series of restructure complete like so many times. During 2002, you have done a restructure, and then 20, I think that's around 2010, and then you have done another structure, and then that's 2020 restructure. There's so many restructure going on, but then still you still have a lot of scandal happen in this firm. And then I think the third reason why Credit Suisse has gone so bad is because they have no risk management, just like the SVB. So you have a very, very bad, you have very, very high tolerance of, of risk, maybe obsessive level of risk tolerance. And then you have, no risk control whatsoever. And then you try to hide all these losses. You try to, cook the book. You're trying to make the entire Credit Suisse balance sheet so nice, and you're trying to put these toxic assets, you're trying to put these derivatives outside of the balance sheet, which means off the balance sheet. Because a couple days earlier, PwC, which is one of the biggest auditing firm, they have published a adverse opinion on the Credit Suisse. Basically, they know something's really wrong of the Credit Suisse balance sheet, and uh, there was a call directly from the SEC. So SEC was asking Credit Suisse officers some questions, and then it turns out there are just big problems uh, with their financial report. So that was a material weakness, so to speak. So that means something. If you found a company's doing all this, and then it has a weird balance sheet or financial report that you cannot figure out whatsoever, and there must be something huge below the surface. There must be toxic derivatives, or maybe traders taking excessive leverage and hide it elsewhere. Maybe they will hide it in a shadow banks. They probably hide it in a separate legal entity. Maybe a company in Bahama, maybe in I don't know, Fiji Island, maybe on the Virgin Island or whatever. They probably try to put this debt and also these risk exposure out of the balance sheet. So when auditor and also the SEC find out something is wrong, they are having these investors pulling out of money from, and these depositors also taking money out of Credit Suisse banks. So right now they have to call for help because they have very bad risk management skills, and they like to break the rules and they pursue huge profit. I think that's a very toxic company culture, and after 10 years, no one is able to do anything about it after countless of company restructure. And then right now, they have successfully buy out their time because Swiss National Bank obviously is trying to bail out this company. Um, and some people may claim that this is not a bailout, or just say it's not a bailout. Just say the SNB tried to find out a solution for Credit Suisse, and SMB provided around um, 50, 500 billion, no, 50 billions worth of Swiss franc to trying to help uh, the um, the Credit Suisse with the ongoing situation, which worth around $54 billion. But I highly suspect this money wouldn't last long, and plus the fact that they're losing customers because most of the customers are very sick and tired of what they have been doing, right? So you have once I was reading the one of the Credit Suisse banker, he was helping lots of oligarch and also lots of Russian bankers, Russian oligarch doing money laundering and tax evasion, and then he was found dead in his own apartment. That kinds of that's how like I cannot stop thinking why of it. I stopped thinking, okay, is this, and he was the top sales of the Credit Suisse. It kind of just I can't help to keep wondering just how many of these people are there still inside of Credit Suisse. I mean, this entire thing needs a serious legal charges, and you need investigators, to actually, if the shareholders wants to keep the bank, they need to do this. And right now, they having this money, they be able to breathe a little bit. They try to win their customer back. But the problem is now the Swiss government trying to put a forced merge between Credit Suisse and UBS. So that might be a problem because UBS wouldn't become, if you are a good bank, and then the government tells you there are a bunch of, that crazy and super aggressive, and then a company, but then they are full of tax toxic assets and very risky investments. They seem to have good capital ratio, but they have extremely bad company culture. And no one is following the rules. And would you want them to become part of you, right? Would you want to accept both of their assets and also their liabilities? Of course, you don't want it. So right now, UBS, uh, we will find out what's going on with Credit Suisse on Monday because UBS is going to release more information regarding to if they're going to accept this forced merger or not. But I highly suspect that UBS is going to take the deal. But if Swiss government forced them to do so, I don't know what it will kind of lead. But it seems the merge between UBS and also the Credit Suisse seem to be one of the best solutions so far. So thank you guys for watching, and I will see you in the next episode. If you like my content, please subscribe and click that like button, and also feel free to comment on the section below. And I will see you next time. Bye.